Welcome to Dave and Dom Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Welcome to the Dave and Dom Demystify show, and this week we are recording from Dubai, and I have a very special guest, founder and CEO of Wio Bank, Jayesh Patel. Welcome, Jayesh.
Thank you very much. It's great to be on the show.
I realize it's crowded and you're in high demand here, but I really appreciate the time that you can spend with me and Dave. We'd love to hear about how did you get started? Obviously, neobanks isn't a new thing. So how did you get started? Why did you get started? And tell us a bit about your journey as well, please.
Absolutely. It's great to be here. There's a great buzz happening at the place. So a lot of interest in FinTech and new tech. I'll tell you how we got started. We are owned by several Abu Dhabi-based companies, the Abu Dhabi Sovereign Wealth Fund, ADQ, Al Dhabi, FAB, and EN. When we were set up, I think the vision was, what does the next 10 or 20 years of banking look like? And that's what it started with. And one of the things they realized was the economy is moving towards digital and digital businesses. And the banks that are needed to serve them have to be different genetically. And so they took the leap of faith and said, okay, let's build a bank, not just a digital bank, but a bank to serve tomorrow's businesses and tomorrow's customers. And that's how we started. So that was the premise. We had to demystify what that means. But we started working on it, and I think we came up with three core areas of what we want to do. One is we saw a great opportunity to continue to improve the banking apps that are there. Yeah, so we serve SME customers and we serve individuals. So we have banking apps for those customers that we've launched. The second big vertical we see is embedded finance. I know it's become a buzzword, but about 3 years ago or 3.5 years ago when we started, very few people were talking about it. We think this is going to be a huge growth engine. We think customers are going to go to platforms which they are already on and access financial services. So that's our second big exciting vertical. The last one is banking as a service, a little more generic. We've invested a significant amount of money in building great tech. We want credible partners to be able to access this and launch products. We think this is a great way to democratize finance in the region. So three core areas. We started about 3.5 years ago. We launched the SME bank about 2 years ago and the retail proposition about 10 months ago. It's been a great journey. A lot of new tech. We have people from almost 45 different countries who work with us. So a lot of the cool FinTechs we've managed to attract talent. And it's been a great journey. We've been doing well. We are the number one bank for SMEs for new customers. We get more customers than the second and third and fourth bank added up. So I think that's going well. Customers are pretty happy. We didn't want to become a transactional platform like many of the digital banks have. We want to be the operating system for these businesses. So we want to aggregate services so that managing money becomes easier for them. So they focus on their business. That's our view and that's what we are building. On the retail side, a much more simpler experience that goes all the way from savings. We give a great interest rate, 5%, and 5.25 on fixed deposits. So all the way from savings to wealth management in one simple platform. We want to make sure my belief is customers over the years globally, banks have done a fantastic job to convince them they can manage their own money. We want the customers to get the confidence back that they can manage their own money. And that's what we are building.
So can I ask, in terms of the way the bank is built, are you licensed? And in terms of the platforms that you've used, have you used core banking provider and have you used other kind of FinTechs to sort of enable the total experience? What's under the hood?
Yeah, it's a great question. So look, we are a fully licensed bank. So we have about $650 million in shareholder capital. We're natively on the cloud. We've used Mambo as a core and been very happy with them. We've integrated FinTechs in different parts, FinTechs and tech companies in different parts of our platform. And we've had interesting experiences. So some have worked very well. In some cases, we've realized that the older, more experienced platforms have the rigor that's needed for a fast scaling bank, given that we are heavily regulated. So it's been an interesting experience. We continue to partner with very fintech and digital platforms, but we also partner with some of the well-known names in the industry because you do need resilience when it comes to payments and financial services in general.
Do you see any competition, or do you think there is competition coming from players like Revolut? Obviously, we saw Nick Strongski hear this at the conference. Like, were you quaking, or were you like, it's a bit of co-opetition? How do you feel about that?
Look, I think Revolut's a fantastic product, and I think there's a lot of interesting products around the world. The competition's always great. I think it keeps us on our toes. The way I look at stuff is, I think if you look at financial services, it doesn't cross borders as well. And Revolut has done a great job of doing that. But if you look at financial services, it doesn't cross borders as well. If we look at our bank, we were profitable in the first 12 months of full operations. So it's been a phenomenal journey. Our NPS on our customers is fairly high. We're building a platform that, one, is localized. I think it's paramount to understand how the local market thinks and how your products are built for a local market. And I think that's our strength. So we're building in the UAE. We'll expand in the UAE, deepen relationships here, get more product lines. We want to go to other markets also. But again, for me, in the region, you have to localize. I think we see plenty of products around the world that move to different markets and have different levels of success.
You started 3 years ago and you're profitable already. I mean, I just got to shake your hand. That's phenomenal progress. Seriously, I mean, the average in the UK, the market that was meant to be leading the neos, was over 7 years. That's the average. Even Starling Bank, 7 years. Metro Bank, 9 years. So to do it in 3 is phenomenal. Well done.
We launched our bank, I think, about 20 months ago. Every time I speak, it's a few months more. But we were profitable in the first full year of operation. So we had about 6 months with the SME business. And then in 2023, we were profitable by the end of the year. So I think look, we're very strategic about the business we want to do. We're very focused on adding value to customers, but where there's revenue. I built a previous digital bank, which also did fairly well, and we wanted to scale. I think there has to be a good balance between scaling and driving revenues. Right now, if we have $100 to allocate to investment into what we build, we want to allocate it to places where we'll make money. Yeah, maybe a part of it on innovation and a part of it on some other services, but we're very focused on how can you actually make money out of the services you launch. I think that focus of ours, the focus on our customer segments, has created this very clear approach of how to become profitable, and we want to stick to that.
So I was interested, you started with SMEs and then have moved. Why did you decide to start there? Because most banks take the converse route, which is they start with individuals and then move into business banking. And did that play a part in becoming profitable as well?
It's a great question. Look, we had this debate. I'd previously launched a digital bank for individuals, for millennials. I think SME, we saw a great opportunity. We didn't see too many players competing in this space. The existing propositions weren't fulfilling their needs. I think with the change in technology, entrepreneurship is just going to scale. Everybody wants to do a startup. Everybody wants to do things by themselves. And I think the operating model of businesses will also change. So we think it's an area to invest, grab market share, and grow for the long run. The revenue pools are better on the SME side, so that has been great. So we focused on a segment where we thought we could a lot more value from the get-go, and that had healthy revenue streams. Once we had done that well, we decided, let's take the learnings from that and let's figure out what we do on the retail side, because retail has a lot of competition. And the learnings we got from the SME, we applied some of them to the retail, and we followed a similar strategy for the retail side. The SME definitely played a big role in helping us getting to profitability.
I mean, when I speak to some of the neobanks, a while ago, we're kind of saying, well, we're technology companies with a banking license, blah, blah, blah. And quite frankly, I always said, if you're a bank, you're doing banking and you use technology. It's a bit like saying, I'm a bank, I've got several branches, I'm a real estate business, but you're not. You're a bank, right? So I'm intrigued. I wonder if it's the fact that you focused on being a bank that allowed you to be profitable as opposed to focusing on technology.
I think it's a great observation. I launched, like everyone else, I was super keen on the super app. And we went down that path. We integrated with a bunch of lifestyle players. And it's all great. But you have to realize, as a customer, if you're going to go to your banking app, you just want banking. If you want to book movies, there's an app for that. One of the core realizations we had was exactly theirs. We are a bank. We are in the business of serving customers in financial services. We need to be very good at serving customers, and we need to be very good at financial service. And the rest, to me, is noise. I think one of the scariest things one can do is fall in love with the tech because it's changing so quickly. You're going to burn yourself very quickly. There are some very expensive solutions to very cheap problems in tech. And I think this is something to watch out for. So I think we try to keep it focused. We have a fantastic team. So we try to keep it very focused on the proposition, on the customer, and what we build.
I love that. Very expensive solutions to cheap problems. It's going to be on my T-shirt next. So in terms of the sort of customer, I mean, my background is user experience and design, and I'm a firm believer in actually going and talking to people, doing some research before you get started. And, I'm still to this day surprised at how few people, when they're doing a startup, actually do that. Did customer research in the early days play a very important part to you? And in terms of the experience itself, how much emphasis was there on experience? I guess I'm trying to understand the balance between experience and technology in terms of your thinking.
Yeah, so look, when we started, I think user experience, customer service and interviews are a double-edged sword. You need to be very careful about what you take out of it, but I think there's a lot of good out of it. When we started the SME business, we wanted to understand what is it that we build that will actually help a customer. And the objective was very clear. We want our customers to do better because they are with us. That is very clear. So what is that better? So we had a panel of 100 different SMEs, and everyone from bakers to a tech startup. And we tried to understand their real problems. And we tried to understand what are the tools and capabilities we can give them that will make their life easy. It's a limited set, but it has to be core to them. So that played a really important part in trying to figure out our proposition. On the user experience, again, I think it's one of the most important parts of a customer. Again, one of the things I talked about is how customers have lost confidence in managing their money. Everything we do on both platforms, we go through iterations to simplify it with the purpose of making sure the user experience is right. And if you look at our apps, they take a little bit of getting used to because they are not structured like some of the traditional banking apps. But once you get used to them, you can't go back. So it's critical. At the end of the day, you simply want to understand what money you have, how much you're borrowing, what rate you're borrowing, and how your wealth is being managed.
Again, you said something fascinating, which people have to get used to the way you do things. In a traditional process, I'm not sure that would have ever happened because you'd have said, look, we don't want to put impediments in the way of customers. But, I have this theory that basically the banks have trained customers to do things in a very specific way. So it must have been brave to go, well, we're not going to follow that path. Can you just sort of tell us a bit more about that in itself?
Yeah, so one of the slides I have in my presentation is do the hard things that give you long-term differentiation. Yeah, I think one of the biggest challenges for us is sticking to why you exist. We existed for a specific purpose. It's super tempting to copy the existing platforms because it's easier. It's very hard to change consumer behavior. So I give you an example. One of the products we have is in our app, you get a debit card, but the same card is your credit card. And you can switch from debit to credit in the app, and you can choose which transactions you want in credit, or which ones you want on debit. We are, I think, one of the only credit cards in the world where you can predict how much fees you're going to pay. And you can see, and there's a bar saying, okay, I'll pay 40% of my balance. It's 100 dirhams fees. If I pay 30% of it, it's 20 dirhams fees. And then you choose, is that 20 dirhams worth is the fee worth the opportunity cost? Yeah, maybe you want to buy something and you're ready to sacrifice 20 dirhams. I think making some of these changes when you're used to a credit card statement, which is a little bit like roulette, you don't know what the bill's going to be, the fees of the bank are going to be. I think making those changes take time. And convincing a customer, you don't need two cards. You just need to know where you're spending your money, where you're spending borrowed money. It's that simple. Eliminating this productization of banking products is core. We think that will drive simplicity. It takes a lot of effort. One, it takes a lot of conviction to do it. Two, you have to take the customer through the journey, and it's not as easy. The good thing is when they go through it, they love it. And they become your biggest advocates, and they refer more customers to come and join this product.
It's official. I love it. I mean, again, the idea of being able to switch from debit to credit, like you say it, and I've never thought about it, but it's such an obvious thing, and we can do these things in a digital world. We're not hidebound by the rules of the physical. So it's so interesting to kind of hear that.
So before I joined the fan club, even more so, Dave and I both built small businesses. We sold them, so we know what it takes to kind of run and build a business. And I have to say, my banking relationship was dire, right? Because the guy that came in literally looked like he came out of university, right? Just been to see the baker, the hairdresser, and some guy that owned a pub, and then was telling me he wouldn't give me a loan because the numbers didn't stack up. And I'm like, well, hold on one sec. I'm not even sure you understand my business. I have to explain my business to him. It's like, well, in software, we sell a license, then we have to implement it, which means that there's all these bodies that I have to hire behind selling a license, right? It's a normal curve. But the problem was he just didn't understand our business, right? So what is it you're doing different in that kind of scenario? Not necessarily to the software, my business, but just to understand like the different problems different types of businesses get.
It's a really good question, and it's a tough problem to solve here because I think there's a few fundamental things. One is industry is changing. The traditional barriers and silos of industry that existed don't exist anymore. I think revenue generation is fundamentally changing. Yeah, now you have subscription. You have so many different kinds of revenue models that are coming out. I think we are taking a stab at it. We have a long way to go. I think to me, the approach is you have to realize you will not be able to address every customer's needs. And that's a good recognition because there's a lot of great companies who can address some of the needs that you can. So for example, there's some phenomenal platforms that do subscription-based revenue finance. If you as the bank don't have the appetite or the algorithms to be able to understand and lend to a company like this, then partner up with the guys who are focused just on subscription-based revenue. And this notion of the entire pie sits with whether you're a bank or a telco or an FMCG company, which has been the tradition, I think, for the past 150 years, that is beginning to shift. It's easier for digital platforms to do that because you can integrate, you understand it. I think you're less greedy about getting every dime out of it. And you're more focused on saying, you're my customer, there is a need, I can solve it, but if somebody can, serving you is more important than me making money off of that need. So I think for us, it's going to be discoveries. We want to build vertical expertise in a few industries and learn them, but it's a journey. It will take us time to get there.
We're running out of time. I just had one final question, which is we're here for the Dubai FinTech Summit and, you can really feel the energy in the place. It's incredibly crowded, lots of great speakers. What's it like having a FinTech in Dubai?
I think Dubai, the UAE, it's an incredibly energetic place. And I think the next 10 years, there is so much opportunity in the region. I think there's a few fundamental things that are different. One is the government's driving a ton of initiatives on digital, ton of initiatives on identity, on opening up different verticals of businesses. Yeah. So you have an incredibly good ecosystem. You have access to capital. You have talent coming from all over the world. We have 42 nationalities or so from all across the world who've moved here to help build a business here. And if you just walk around upstairs in the hallways, you'll see people from everywhere in the world. So I think there's a lot of plus points. There's a lot of growth. There's a lot of buzz. You can tell by the traffic outside. It's a great place to be. I think it's one of the best places to be in the world if you want to start a FinTech.
Amazing. Well, thank you so much for joining us. We're both fans, I think it's fair to say.
Well done on the business and really appreciate the interview. Thank you so much.
Thank you very much for having me.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe and tune in next time as we take another topic and demystify it.